And welcome. This is Mary Ellen McGonagle with your weekly Edge show for Friday, July 14th. Today, as usual, we're going to take a look and see where did the markets close for the week. We had a pretty strong week last week. Also, some of the headline news that drove price action and viewer question of the week. And that question has everything to do with what to be on the lookout for going into earnings season, what chart patterns are the most bullish, and we'll get into that as well. First up, let's take a look at some of that news last week that pushed the markets higher. First up, we did see yields, interest rates pull back. The yield on that 10-year Treasury did get below 4%, and that was very good news, certainly for growth stocks and other areas as well. In particular, housing stocks powered 7% higher. We'll get into other areas of strength that took place last week as well. And then most impactful beyond that was inflation data. We had two reports last week with that core CPI number, and it rose by the smallest amount in 2 years. Very constructive. We also saw weekly jobless claims fall, but relative to inflation, again, the wholesale inflation number, that's that PPI data in June, fell sharply. So this is very good news for those and all of us, of course, on the lookout for inflation to finally begin to recede. So good news there. Next week, we do get June retail sales numbers, industrial production data, and then also leading indicators. Last up, we will also see home builder confidence, which most people are assuming will come in quite positive. So let's go ahead and take a look. Where did we close the markets for the week? And here we are with the daily chart of the S&P 500, and the broader market index rose 2.4% last week. We can see that gap up on Wednesday on that initial CPI report. And we can also take a look at where we closed. We did close just above 4510, which was a very near-term area of potential upside resistance. So good news there. We have positive RSI momentum trending higher, just dipping into overbought position, which can often lead to at least a potential modest pullback. And the stochastics, a faster moving momentum indicator in positive territory, trending higher. So from here, we're going to take a look at those 11 sectors within the S&P 500. Take a look at these 2-month daily price chart view with a daily chart. I've added a relative strength indicator overlaid on top of these charts and sorted them in descending order. We want to get a feel for where the strength is currently in the markets, all with an eye toward you being on top of those areas so that you can participate in that strength. And first up here at the forefront are consumer discretionary. It also happened to be the top performer for the week, and again, all about housing. There were other strong areas within this sector as well. Let's go ahead and take a look as we move forward. I did want to share with you that REIT stocks are continuing to trend higher, and these stocks do generally fare well during a period when individuals and investors believe that the economy is strengthening up, and we are seeing certainly continued reports of that as well. One of the strongest areas in the REIT space is mortgage REIT providers, again on the heels of the home building rise that we're continuing to see in those stocks. Then also up here in the forefront, industrials are continuing to trend higher. They did pull back a bit later in the week, but again, another area where home building related industrials are faring the best, but other areas also doing well. Technology, again, up here at the forefront. It had been underperforming for about 2 weeks, although we did, toward the end of this week, see a nice resumption of this group's uptrend. As we move forward, I'll share with you two of the strongest areas in technology, again with an eye toward these being areas you'll want to participate in. And then moving forward, some of these weaker areas down here in this lower quartile, we can see utility, healthcare, and staples. These are defensive areas of the market down here. Financials did get a little bit of a bump this week, but it did underperform the broader markets. This is XLF. We had several large bank stocks report today, and not all of the numbers were positive. So we're going to keep an eye on that. So let's move forward beyond these broader sectors and take a look at some of the underlying industry groups. I use ETFs that are really quite powerful in helping keep on top of where the strength is shaping up. And what I did want to share with you up here in the forefront, the first of two strong areas in technology, and here we are with IGV, the software ETF, up 5.6% for the week. Take a look at this nice high volume, and then we had that MACD crossover into positive territory, so quite constructive for that group. Also up here, we did see Brent crude oil rise quite a bit for the week. However, today there was a pullback that in turn impacted the energy subgroup. So this downtrend reversal attempt, certainly in crude oil pricing, did not quite make it to that 200-day, and then we are seeing a pullback. Also up here at the forefront, the other strong area within technology, and that's semiconductor stocks. This is SOXX. The group was up 4.8%, and we can see breaking out of this nice base. Also on the move with this MACD potential crossover, which would indicate a new uptrend for this strong industry. And then as we go forward even further, I did want to share with you a couple of dynamics. The US dollar did fall quite a bit last week, certainly on the heels of generally positive inflation data. And in turn, we did see gold pick up just a bit, but we have not reversed the downtrend. Other areas benefiting from that lower dollar are some of the emerging market ETFs. And one last area that I did want to point out to you here is that small cap index, and it was up 3.7% last week. You can see this gap up into a nice uptrend. Small caps were up about 3.7%, really diverse as far as the areas that participated. We did see a number of biotech names, also software and otherwise. So from here, I did want to go ahead and share with you that concept of chart patterns that you want to be on the lookout for. And I'm going to share with you this particular, first up, prior to that, I wanted you to have a look at the Home Builder ETF XBH. You can see the nice confirmed uptrend in this particular group as it continues to trade higher. But from here, I did want to share with you stocks that when they reported their earnings last quarter had a bullish gap up into a base breakout and then continued to advance. And of course, this is with an eye toward giving you a good idea of what to be on the lookout for this earnings season. So here we are with Workday WDAY. Here's that gap up on earnings right here. Let's see if I can mark this up. And we did see a little bit of a pullback subsequent to this gap up into a base breakout. This particular period was a little difficult, certainly mid-June, for these software names. However, of note, you want to pay attention to that RSI, and it was able to stay up there above that net neutral 50, as well as the MACD in positive territory. And then we did see a nice continuation trend higher. Another example of a stock that did experience a gap up on earnings last quarter is Urban Outfitters. We can take a look at the fact that this name came out of a very lengthy base. In this case, you can cite it as a flat base formation. And from here, I will go ahead and share with you that concept. And we can see that once the stock did advance to a level that was above the high of this back and fill flat base, it did gap up in response to strong earnings. Take a look at this big volume on that gap up, very constructive. And from there, we've seen generally a nice uptrend with that RSI momentum remaining in positive territory. And from here, let's go ahead and take a look at a stock that did gap up originally after reporting earnings last quarter. And you'll see very quickly the failure that ensued. This is Ligand Pharmaceuticals, LGND. Here's that gap up on earnings in the beginning of May. And a couple of characteristics of note is the fact that we did just get to that base breakout level. However, on the day, the stock closed in the very bottom portion of its trading range for the day, and that is bearish activity, certainly on this single candle. And from there, we can see that the stock did falter beyond that. So from this view, we can see that it broke below that 50-day simple moving average. With that, the RSI trended into negative territory, as did the MACD. So that would be viewed as a gapped up base breakout failure, and you'll want to certainly be aware of that as well. But by and large, that gap up into a base breakout after earnings is a very bullish phenomenon. You will see stocks most often go on to greater heights from there. That's it for this week, everyone. Have a great weekend, and I'll look for you here next Friday. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.